Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alcanan, along with Brianna Valesky, and we have Todd Schoenberger on the line. He is a trader and stock strategist. Todd, how you doing this morning?
Well, thanks a lot for having me on today.
Yeah, no, we're glad to have you on here on this Friday. The S&Ps are perking up here, up 3.25. A topsy-turvy month in July with a little bit of grease going on. No one cares about that now. Could you give us your take on the overall market?
Yeah, it's all about the Fed these days. I mean, after the headaches that we had dealing with Greece, and I do believe that traders knew in the back of their minds that there would be some type of a relief valve for Greece, which is what we did see. But right now, it's all about the Fed, and now the guessing game of when they will be increasing interest rates, and I think it's just a pure guess right now. I mean, you have Bill Gross saying September, you have a number of other strategists saying sometime this fall. Maybe even going into the November meeting, but realistically, I mean, here we are in the third quarter already, and the metrics are just not there to support a Fed rate hike. So I'm still of the belief that we're not going to see anything until 2016.
Okay, yeah, that's it's kind of the way, with China. You got a few other things going on. It kind of feels that way as well, and the bonds have been getting a little bit of a bid also. You made an interesting comment before we came onto the air here. We don't talk politics a whole lot, but you said, what would a Donald Trump presidency do for the market? And boy, I want to hear what your response is to that.
Yeah, I mean, I think if anything, it's going to be remarkably positive, and we really as a country we've never really had a politician other than, I mean, if you really go down to the, not the presidency, but lower levels, maybe with Mayor Bloomberg, and who was in business and then becomes a politician. And you have other, you have with Tom Coburn out of Nebraska, who was a pharmacist, a doctor, a surgeon actually. So some people have actually had other lives or different careers and then went into politics. With Donald Trump, it would be interesting because it's something nobody's talking about, that if he is president of the United States, what that would mean for the stock market. And I bet you if you poll 10 people, you'll get 15 absolutes that, yeah, the markets would do extremely well, especially for companies that obviously are based here in the U.S., domestic companies, but they could be multinationals. I'm not talking about the Alibabas of the world doing well. I'm really talking about U.S.-based companies that would likely do well with a Trump presidency. And it'll be interesting as we proceed through this process to really make his move, and obviously he's the leader now, but if he can strengthen that leadership, it'll be interesting to hear what a lot of people on Wall Street start to say, because if it does become a reality, I think everybody would have to say, yeah, this would be a remarkable positive for the markets.
Yeah, I mean, you think you can get enough of the, of the left vote to get in there?
Well, look, here's the thing about Donald Trump, and Donald Trump is really, I suppose his approach might be a little bit on the edgy side, something that the U.S. is not accustomed to hearing. They also don't like the idea of like the finger pointing, the in your face type of attitude. But here's the thing. It's almost as if the country needs this, though. I mean, we kind of had this with Ronald Reagan. And if you think about back in 1980, when you had the Iran hostage situation under Jimmy Carter, and then Ronald Reagan goes and the Iranian hostages are released. But it wasn't just that. It was also in other meetings with Mikhail Gorbachev and really as Americans, the entire country, how we were viewed globally. It'd be interesting to see if you get somebody of that personality, that strong, extroverted, A-type alpha male that's in there that can not only do a good job, but really represent and be a great ambassador for the United States. And I think that would be a true rah-rah moment, something that this country hasn't seen in decades. So it'll be, I believe that as we go through the process, and especially with the debate starting next week, it'll be interesting to see as we get through going into the fall. Donald Trump right now, he's in the lead, and
Huh.
I do believe that he will end up on moving forward.
Wow, that's an interesting take. So let's move on to the markets here. Crude got beat up, had that rebound rally over 60, now revisiting the lows of the move. What's your take on the crude oil market?
Yeah, how about that? I mean, here you have an oil market that has been sliding, which is really, if you really look at history, usually the summer months you'd have more of a pop in oil, and I think that this is really causing some challenges for traders these days. And the reason why you'd have a pop is because you have greater demand. People are going on vacation or driving, but also hurricanes. That's something that we haven't really talked about in the last few years. After Hurricane Sandy, we haven't had that real monster hurricane in a while that's really going to take out a rig. And I hate to say it that way, but it does disrupt supply, and therefore oil prices to obviously rise quite a bit. We haven't seen that yet, and it is interesting that here you have oil below 50 now. I don't think a lot of traders were forecasting this, and really what's attributing to this is China, and now you have the slowdown that's taking place there, and they're also in a bit of a short-term turmoil, I would say. So as a result, oil is definitely going to be more of a vulnerable play right now. Long term, though, I'm a big believer in it. I'm a bull on oil. I probably will be forever. And but right now, short term, you want to either short or stay away from. And we saw that in the earnings too, Joel. If you think about it, we had Chevron and we also had Exxon out, and their earnings really showed that because of these deflated oil prices, it's really impacting the bottom line.
Okay. Gold here, back under 1100, trying to battle back a couple lows in the 1080 area, trying to get back over 1100. What do you think? It maybe a little bit of a rebound here. You did have a big break consolidation. Some people calling for triple digits in the bullion. What's your outlook on gold?
I'm not a big believer in gold right now. I mean, I'm going to say the reason why is because gold does not trade the way it's supposed to trade, the reason why people would even invest in it. I mean, it used to be with inflationary concerns or geopolitical events. That was the reason to get into gold. And you don't have that now. And I'm not saying you don't have the geopolitical events. I just don't think that the reasons are there anymore to actually own it and really invest in this. So from an investor standpoint, from a trader standpoint, when you're looking at gold, you're trying to find that one catalyst that's going to cause gold to rise or go down. And there's nothing there. There's no real evidence there. It's almost like trading like a pink sheet stock. So you have to be extremely cautious when trading gold. As short term, my outlook is definitely, I'm bearish on gold right now. I just don't see any reason to invest in it. And I think you're going to have continued pressure throughout the rest of the summer, or at least throughout the rest of this quarter. So for any gold bugs out there, definitely buyer beware at this moment.
Okay, what's your take on earnings season here? We've had some surprises, we've had some beats that haven't been exactly treated too kindly. What's your take on the earnings season so far?
So far I think it's been, I would say, a collective yawn from everybody. You're not getting the key number that's coming out that is going to be a shock and awe moment for Wall Street, and we haven't seen anything that has truly shocked. And I mean, I think if anything, maybe Amazon's numbers were really the only shocking point. Facebook did well. I will always say that if you're not buying Facebook now, you'll never buy it. I mean, there's no, you're a fool to pass on that. But like Twitter, continues to have its own struggles because they just can't seem to monetize its user base. You're really seeing the difference now, I think, in what we see in earnings reports. as it used to be that you would actually look into you want to hear what you want to hear what the chairman of the board or the president of the company is actually forecasting for the company. Like, it's one thing to talk about the numbers, but you want to hear what they have to say in their statement. Are they actually seeing some positives, or are they optimistic in quarters to come? And if they are, then that generally is a good reason to own the stock. Now it's not so much that, it's really taking a look at really not only numbers, but Wall Street's going to come up with its own calculus of trying to figure out how to value the current client base, the customer base. And that's really tricky. That's a tough one to sell. But earnings don't have the same gravitas, I think, that as once did, as far as being market moving driven events, and not like you have, like, say, in Greece or some other geopolitical event. So but right now it's definitely a yawn for me, and hopefully maybe next quarter we'll see something a little bit more exciting.
Okay. Yeah, just going into individual stocks here. Apple had the big run up ahead of it, beat the numbers, beat revenue, didn't do any, didn't say that much good or bad here, but stock kind of got punished off it here. 122 level seems to be finding some support, trading up a little bit in the pre-market, got an upgrade here. I can't initiation of coverage, I believe, by Nomura with a 145 price target. Apple 122, buy, sell, or hold.
Buy it, definitely buy it. You want to buy it, and you want to buy some more of it, Joel. And here's why: Apple continues to be a category killer as far as their products and what they offer, and you still have people that will wait out all night long. They'll wait a week long for a new iPhone. They might have 7 other iPhones, but they want that one new iPhone. And nobody waits out all night for a Samsung product. So Apple continues to be extremely brilliant with their marketing, with their build-up, with really building up the hype for their new products. And their products never fail. They never disappoint. And that's the best part about it. I get it, the Apple Watch, the first generation, you're having there are some challenges there. But when you start looking at the iPhones, the iPads, people never leave disappointed. And that's how you create customer loyalty. And those customers will always be back. You definitely want to buy Apple at these prices right now.
Okay, good. All right, good input on that. What about? I mean, we have all kinds of different people in the chat room here. We have active traders, we have passive investors, we have option traders. If you had to pick, I mean, here we are up near all-time highs in the markets. If you had to pick, like, what's your favorite stock out there? Like, I mean, you mentioned, you have to own Apple. You mentioned Facebook. You mentioned some of these other stocks. But if it's just something that you're going to buy right now, and you're not going to look at it for 20 years, would it be like, the overall market, by the spiders? Would it, what stock or index, what would it be?
Symbol is MTB. And based out of Buffalo, New York, I would consider them a regional bank. But here's the difference. This company, they just a couple of years ago took over Wilmington Trust, Wilmington Trust was one of the classic century plus old age banks, and they failed during the economic implosion, and M&T took them over. M&T Bank is controlling a yacht size of mortgages right now, and they are servicing these mortgages, but they are doing such a good job at them that they're making money off of all these mortgages. So what they did with Wilmington Trust, as well as now they're looking at taking over Hudson City Bank. All of these mortgages, they are now taking over the mortgages. Therefore, they're making money off of every payment that's made in these mortgages. And all it is about servicing. They don't actually have to go out, and there wasn't anything as far as them actually offering the loan or providing the mortgage. They're secondhand, but now they're making money off of that, and their revenues are skyrocketing. M&T Bank just hit an all-time high a couple of weeks ago, and stock has a dividend a little over 2% right now. But it's one of these companies that continues to look for other acquisition targets, and they really want to branch out further into the Midwest. And as they really grow their footprint in this industry, it's one of those stocks that is really the surprise sleeper. A lot of people will pass over because nobody thinks about M&T Bank. But I would definitely highly suggest that's something that your listeners should take a look at, just as one of those picks that could actually do well in a portfolio and really be kind of that non sexy part of the portfolio, but it's definitely something to consider.
And it pays a dividend as well, you mentioned.
It does. Right now, I think the yield is about 2.1, 2.2%. Not much. Stock actually hit an all-time high. It clipped. It actually wasn't doing well the first half of the year. It clipped over into 130s. It reached as high as 134. I have a price target of 143 by year end. At year end last year, it finished at 128. So I see it hitting 143 this year. It definitely had a spike this month. The month of July has been extremely favorable for M&T. Their earnings were very good. They just released last week. So definitely your listeners, it's one of those stocks you might want to consider, because everybody talks about the big banks, talk about J.P. Morgan, Bank of America, and a few regionals here and there. But M&T Bank is just one of these companies that continues to do everything right, but they do it quietly. They're not flashy, they're not showboaty, but it shows in the stock, and that's what we're really talking about, is making money in the stock. So definitely one of those companies you might want to take a look at.
And if you had to pick one stock to avoid, one stock that you just, that people maybe that's in the spotlight, and people like in Netflix. I'm not saying Netflix, but if you had to pick one stock for people to avoid, what would that be?
Well, okay, let's go into that segue then. If I had to think of one that I would avoid, I mean, I would have to say it's going to be in the cruise industry, probably Carnival Cruise Lines right now. I mean, the company has not been doing well. You hear constant news stories about these viruses on these cruise ships, and you have to wonder about the ones that you're not hearing about. So what I understand is that you had a peak in cruise people that going on these cruises. They had a peak last year. The numbers have actually been dropping off. To be representative of the economy, though, I think people might decide to fly somewhere instead of taking a cheaper cruise. But it will be interesting to see as we go on over the next couple of years how the continued troubles that you hear on these ships. And you have to wonder, it's just one of those companies that's out there. They obviously advertise quite a bit, and they tend to be top of mind whenever somebody's trying to think of traveling. But as the economy continues to do what it's doing and it continues to grow, I think you have a lot of people are saying, look, you know what, I'd just rather fly and stay at a resort rather than jumping on one of these cruise ships. So it's one of those companies I'd probably stay away from.
And someone in the chat's asking, do you ever short stocks?
No. I mean, at one time, yes, but not now. Definitely not now.
Okay. All right.
Too much risk.
All right. Yeah, risk is a four-letter word, right? All right. We've been on the line with Todd Schoenberger. He's a trader and stock strategist, talking overall market with us, giving us some takes. Thanks a lot, Todd. Great information
Thank
as
you,
always,
Joel.
and we'll talk to you again soon.
Sounds good. Take care now.